Hey guys, it's Darren with ArbitrageTrade. It's time for Deep Dive with Daniel, where we basically dive into his brain and get his. He brings some good stuff every week that hopefully is relevant to what's going on, and that's what it's been. And sure enough, it was almost too relevant today for us to be talking about this. So the blog this week, which remember you can always go to our website, catch up on all the blogs at arbitragetrade.com slash blogs. And this week's is Navigating Tariff Turbulence, Historical Insights and Opportunities. So we all have, we've learned a lot, even if you knew nothing about tariffs. If you've paid any attention in the last couple of weeks, one thing you have learned is at least a little bit about tariffs, what the media has been feeding you. So let's go and look at some facts and figures from over the years, and maybe that'll help you understand what has happened before. Because as one of Daniel's favorite things to say is it may not be exactly the same, but it might rhyme. So let's go ahead and get moving. Let's talk about what happened today, though, and because that's very relevant.
hmm
So Trump put these tariffs out there. He put a blanket 10%, and then he put anybody that dared do retaliatory tariffs. Um, he basically did retaliatory tariffs back. So it's just kind of this back and forth. I dare you to cross this line in the sand type of thing with many, many, many countries, either those that were sourcing from China or those that were directly also just taking advantage, in his opinion, of the U.S. And that's the truth, though. It's something that every president has talked about pretty much, but nobody's really taken hard action at doing it. And Trump certainly he did it the first time, which they like to call Trump 1.0. And this 2.0 is like with a passion. Maybe it was almost getting killed and shot that made him like, all right, now I'm just going to take it on the whole world. Um, so he pulled back on that today. It was uh, China is the one that he kept, though. He said, "I'm going to take a 90-day pause on all these tariffs, but China, not for you." And they went from he even raised theirs. They went from 104% tariff to 125% tariff now. And we also talked about in After the Bell the fact that there were over 75 countries now lined up to try to talk to Trump, and I think Japan was first when they talked, but they're all lined up now to say, "Hey, look, no, don't do it to me. Here, we'll do this and that and that." And as I think Royce kept saying, "Kiss the ring." It's kind of what's going on. But there's a history. So, I mean, to learn about the future, you've got to study the past. So, give us a little history. I didn't know that there was. I think you pointed out three different tariffs in the past. I had heard of one of them, but not the other two. So go ahead, give us some information on historical tariffs.
Yep. So the first one, and probably the most drastic one, is the Smoot-Hawley Tariff Act of 1930, right? And so pretty much what happened is the Great Depression was kind of starting, and we wanted to kind of be pro-American business, especially when it came to like farming, right? And so we on average had imposed a 60% tariff on imported goods. And this had a very inverse effect of that. We've suffered probably a deeper and more prolonged, in that case, depression. And like we kind of do now with China, at the time we had retaliatory tariffs from Europe and Canada. And so this is kind of, the first history lesson of how tariffs can go wrong. And obviously, we're at double the 60% average we had during that time. And before we move on to the other ones, I think it is just important to note that, with these historical tariffs, the world was a very different place. The US
Right.
wasn't the world's superpower yet.
Right.
We were, obviously 1929 to 1934 is when these tariffs were in place. You're also talking about post World War One going
I was
into
going to
World
say
War Two.
wars. Yes, exactly.
Yep. So you're looking at a very, which is also, we are not directly currently at war, but
Exactly.
war in the Middle East, war in
Yep.
Ukraine, both of
Yep.
which we are funding. China looks to take Taiwan. Questions about how we position ourselves in that situation. So you were referencing to my favorite
The
saying earlier
rhyming.
is that
Yes.
history doesn't repeat itself, but it often rhymes, right?
Right,
So
right, right.
there are many parallels in this case that are worth noting.
Yeah.
Unfortunately,
Yeah, and
none
and
of them are
and
happy
you
parallels.
always you always hear me talk about the Fred reports. There's a lot of Fred reports that mirror back in that time as well. So it's crazy how the finance and the historical all kind of mimic each other. It's almost like it's just planned out every so many years, blah blah blah. So,
Mhm.
um, go ahead. Did you want to mention the other two or no? Just
Yeah,
quickly
yeah,
on
yeah.
what those were.
Let's
Okay,
talk on because I think they all kind of have some parallels of what things are going on today. So, the Dingley Act of 1897, we had an average of 52% tariffs. This was to shield domestic manufacturing from foreign competition. And this one is interesting because while the economic impact initially was good for domestic industries, it ultimately resulted in higher consumer prices and inflationary pressures. What exactly do we have right now? And is everyone predicting that these tariffs would lead to? Inflationary pressures and pressures increase costs, right? So, you know, the fortunate for this one is that there was some short-term kind of positivity for domestic manufacturing, but we don't really have much domestic manufacturing left in the U.S. Honestly, the biggest one that was going to be a tariff winner was Tesla, but there's some funny business going on with Tesla right now, so they can't really reap the benefits of that. Um, and so the last one is the tariff of abominations of 1828.
sounds very
So
final.
yeah, right. So this one was kind of divided the North and the South in America during high political tension times. And this one really damaged consumer confidence and economic stability. And we maybe see some things going towards economic instability right now. But I think we talked about this on After the Bell maybe 2, 3 weeks ago. Is that consumer confidence was at an all-time low, right? So that typically indicates people are preparing for a bad time, right? You don't have consumer confidence being low when things are about to be really good. So, there's a lot of parallels between those four times in history and kind of tariffs and the markets and economics right now of the US.
Yeah, I know that obviously we went through inflation before this year, and inflation is bad for many people. It's good for companies because it increases their margins. So I mean, it's that's probably what makes things look skewed because these companies do so well with inflation because they're inflating their margins. But then
Mhm.
it's the after that is what sucks for people, especially the lower 80%, I guess, maybe even just 90% of the country that suffers because of that. Um, the It'll be interesting to see though. We're basically in a 90-day respite, if you will, except for China. So we'll see. We don't know what's going on in the back of that head of his and his cohorts, if you will. Um, but it is like I've said before. It's a popcorn and Coke moment. You just sit back and watch it.
Hey, Darren, as you said earlier,
Entertainment.
you get shot and then you say, "Nah, just like screw it. I'm gonna burn the
Exactly.
whole thing down," right?
Your
Like,
life changes. Is like I'm gonna get people back. Oh boy. All right. So, in this new tariff environment, which now we can't really say that, but in 90 days we can again. But I guess we could be specific to China here. But who are going to be the winners and who are the losers generally in a tariff environment?
so typically you'd see domestic manufacturing. So this could include things like steel, aluminum, textiles. That being said, we don't really have too much anymore. You actually saw Trump bring back on the table the uh, I can only think of the ticker of the company. It's X. It's the American
And
Steel Company.
yeah, then Nippon and oh, yes, I can only think of X now that you
Yeah.
said it
Oh,
too.
U.S. Steel, U.S.
Yes,
Steel, and
thank
then
you,
the
US Steel
Japanese
and
merger,
Nippon, yeah.
right? So
Right,
so
right.
that's back on the table, which might be good. You typically see agricultural products and commodities, right? So think soybeans, corns, all things we do grow in the U.S. and we do actually export. So that is, I would say, a likely winner, but we actually used to import or export a ton of soybeans and wheat to China,
China,
which
yeah.
now
That's
now
right.
is double the price. So kind of our big buyer isn't really there anymore. So we'll see how that one goes. But the last one is defense and aerospace, right? So we are kind of still, for the most part, the leader in making and producing defense and aerospace technologies. And I forget what country exactly, but as part of their preemptive tariff negotiations, said that they're going to buy a bunch of planes from, I believe, Raytheon.
Hmm.
So there, I do think things like that where there is kind of very little competition are actually winners. The other ones I'm not entirely sure about.
Well, that's what you're gonna talk about now is the losers. So, I mean, we have already seen this happen though in retail. It started before this all happened, and maybe that was just in anticipation. But I saw a chart that Target stores. I forget how many years it went back. It was like if you bought, maybe it was 6 years ago, bought Target, it's gone all the way up, and then it's all the way back down to where it was 6 years ago, or something like that. But that's
Mhm.
what's happened to a lot of retail chain and four walls inner retail. And I also within the last week with my daily news, my three things, I talked about how credit crunch is happening with a lot of people. We talked about those 80% of people that just are struggling. It's they're not spending as much now. We had a drop off in February of people who weren't spending as much credit as before. And that continues to be an issue as far and also if you look at the Fred reports, I'm always going to talk about Fred reports, but delinquencies being at really high right now too. So um, this all has to do with the potential losers. So again, just like you said, it rhymes. I think this is what's happened before. This is what's happening again. In consumer electronics, you said, and especially now that China is basically we're going one on one with them. Uh, Electronics will be a big issue as well, right?
Yeah, I mean, the analysis was run that, an iPhone Pro or whatever now costs $1,000, we'll say, right, for the base.
Right.
And that would be, if tariffs stay as they are with China, would cost $3,500. And Darren, I don't know about you, but I think I would just not buy an iPhone until mine literally doesn't work. And then if it still costs $3,500, I would just go buy whatever like the cheapest Android phone. Like I don't, I know you're not an Apple
Um,
user, but like
to the
I would,
side, the bright
I,
side.
w- I would happily, well, especially now, like when I had switched originally, I do think iPhones were a better product. But nowadays, I'm like, other than my kind of ecosystem lock-in, I don't think Apple is making the better product. And I know for a fact, not a single person says Apple Intelligence is better than what you get from, Google's
Yeah,
intelligence on their
yeah, yeah.
phones, Samsung's, whatever, right? So I do think, a company like Apple, this kind of thing could really hurt more if it is held out and there's switching costs.
Especially since they
But
just came out with the cheapest model again. And now I guess that's not gonna be as cheap anymore, I don't know, but they just released that.
yeah, right.
I forget what it is, yeah. And then the thing I thought about when you said about, "I'm just gonna keep this phone until it dies," basically, I think people are doing that with their cars too. And so that's another industry you mentioned was gonna be, and now even more so, I guess, because if it depends on these tariffs and what we're going to go with, where we're going to go with it. We have that 90-day pause, so maybe it'll flip and it'll be like everybody's going to try to buy within these 3 months, so they don't have to deal with it in 3 months. Who knows? We're also dealing with the summertime, all that good stuff, all at once. You got all this commercial real estate stuff going on. I mean, you've got all this stuff happening. We've been talking about it forever. These black swans, it's like they've all been flying up in the sky, and now they're all coming down to rest
Well,
in the pond.
I don't want to go too far on a
Yeah.
tangent, and this is not financial advice, but I read this morning that the CEO of Delta said they're expecting to have their best financial year ever. Um,
Oh, it was the opposite. It's flattening out, right?
no, 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 they changed their tune. And anecdotally, I've read things about the all the airlines are expecting their highest summer travel ever. And if you look at like all the data behind expected flights and like the staffing they're doing at like certain airports there, that like is supposed to be true. Obviously, people still have to book the flights, people have to have the money. If yields rise, right, people don't have, you know, as much liquidity to borrow against because borrowing cost is higher, which is why Trump wants rates down, is for, you know, Main Street, not Wall Street. So it all tangles together, but we'll see what happens.
We will. And I just mentioned it without even realizing that was the next section here in your blog is the black swan events and potential risks that might happen. So again, if I think that is on a pause for 90 days, basically, except for China. So there is no more retaliation right now. And that's why we had such a big relief rally. This is being recorded on Wednesday. And the supply chain collapse. I mean, that happens during war. Again, it's all on pause now except for China, but China is a major supplier. So, um, and then the stagflation, which I think we've already said, I think that was going to happen no matter what, tariffs or not. So, all this does is just reinforce it. But what do you have to say about those three things?
Nothing particular.
I pretty much covered it, right? I'm sorry, I
Yeah,
took
yeah,
all
yeah, yeah. No, no, no. You're good. You're good.
all right. So the last thing then is we don't know. I think because the title of your last part of your blog was "Where do we go from here?" and we don't even know where we're going next week. So it's kind of it's funny because we don't know where we're going to go from here because that could all change. But I guess in general, you can discuss that in a normal tariff situation, which is not normal at all. What would happen next? Where would we go from here?
Yeah, I mean, you know, looking at the history, it's not too bright. You would expect maybe some short-term positivity, but I mean, on all of the initial news, we were only ever down, right? So I do think it is. I don't think we're going to get clarity for a while, right? I think you're going to see a lot of volatility in the market, and I don't think there's much upside. I think there's much more volatility to a slow drag to the downside, right? Are we going to keep seeing, you know, 3, 6, 9% days? Probably much more infrequently than it's having every single day be like a 6% move in the last week, right? That's just not like a
Yeah,
sustainable long-term thing,
right,
I
right,
don't
right.
think. But you know, I don't think until there's absolute clarity are things going to be good, and I don't see how we get absolute clarity for like, you know, at least 30 days because I think the thing that
Yeah.
really matters is China, right? Like
Yep. Yep.
big deal on the other countries. Like, you know, I got to be honest, like it's just not as important as what we do with China because one of our largest trading partners, and I think they set the precedent of how other countries will deal with it, right? Because sure, it's great that Japan and India and Vietnam want to negotiate, but where do they get all of their parts from that then
Hmm.
sell into us?
Yep.
China.
Yep.
So it's like, you know, we're like peacocking with the other like big dog in town. And it's like we gotta see kind of you know who moves first. And I gotta be honest, I do think it has to be China because it's not gonna be Trump, you know. So but the good thing with Trump is that we know, like, you know, I've read The Art of the Deal. I said that on After the Bell. And the one thing I do remember from the book that I read a long time ago is that he only says these things to meet somewhere in the middle, right? So all he's looking for is a deal. That's why when he did the tariffs on China and they retaliated, he said it was a big mistake, right?
Yep. Yep.
Because if you understand him, it's like he doesn't actually want to do any of this. He just wants to cut a deal with you, right? And they're like, okay, well, we'll play this game. And he's like, no, you dummies. Like, this isn't what I want. Like, now, he's like, now you make me do a dumber thing, right? He's like, you should have just come to the table and we would have talked this out. And like,
Yep.
I would raise 20, you raise 10, but we have some sharing program and we're all good.
Don't force my hand. You know what? It also could be behind the scenes. This is all orchestrated too. I mean, he and she might be have secretly having these conversations, and it's all planned too. Because think about
Mhm.
it, if once this gets solved, so now we had this huge jump because all these other tariffs, put on pause. So now what kind of jump will we have once China and us agree to something, or they decide they're not going to do something anymore, and they actually we agree. I mean, to me, that's going to be another huge jump in the market, and maybe push us into the next era. But I'm wondering, I've been saying June, so ever since this thing happened, I don't know. I think it might be more July, and definitely before the next before August, is my opinion on. Uh, Having the huge fall back down, and then the next era, so to speak, happening, I don't know, August or so. So I just love predictions.
Yeah, no,
Nobody
I
will
mean,
remember. Nobody will remember.
because here's the thing, it's like Trump likes to be liked, right? Like, let's not forget that he wants to be liked. He doesn't. He's not some cold-hearted guy in that sense.
Yep.
Um, so he doesn't want markets to go down. You got to think about who were all the people at his inauguration. I didn't put this in our after the
Yeah.
bell agenda, but it was like, the combination of, I forget, like, all the world's billionaires or people that were at his inauguration had lost like hundreds of billions of dollars in like, 3 days or whatever it was. So, and if that's kind of his, background people, that's not good. And then you
Yeah.
have Xi on the other side who, like, yes, like, you can argue about what he cares about his stock market and economy. But at the end of the day, it's like, from what we can read on the outside, is that people are not financially doing well. The market isn't doing well. They have the kind of the real estate issue. And at some point, you got to pump those things up to keep people happy. And if he's not going to do it through substantial stimulus, which he hasn't yet, it's like
Right.
you gotta cut some kind of deal that
Yeah.
makes things look good for them, right? So I think any kind of deal is good for America, but it's actually probably better for China just because of their growth potential, right? So not
Yep.
financial advice, but use some arbitrage indicators to see when things might be turning around, and that's a place I would be looking at some names.
You definitely should. I mean, we have seen that happen when they try to do the huge stimulus. They just did it to the wrong people. They basically gave it to the rich, and didn't prop up where they needed to prop up. It was obviously
Well, it
unsuccessful.
and
And
it's they're doing it in the hundreds of millions, like, or like, like tens of billions. It's like you got to do trillions, right? Like, what I read is like you slap a 2 3 B on there, and then you got your market ripping. But it's they're
yeah,
like,
yeah,
oh,
yeah.
we're gonna
There you
do
go.
this, and then they're like that's not really anything, all things considered.
Yeah.
So
But they're also working on their real estate issue too. So it's very interesting stuff, especially for nerds in finance, about what's going to happen over
mhm.
there. It's also a mix of politics and a mix of narratives, and I mean it's all thrown together, which is what makes this every week could be anything could happen. So I appreciate you
it's
bringing this. Yeah,
it's astrology for man nerds.
that's right. Good point. That's right. All right, appreciate you bringing this up. Obviously, I think tariffs are going to be, well, I guess maybe for 90 days we can pause talking about tariffs here. I don't know. We'll see. I doubt it. Uh, thanks for bringing in the history, though. I did not know about these other tariffs that happened in the past, and reminding us that the future sometimes rhymes with the past. So I will see you next week on Deep Dive with Daniel. Say bye, Daniel.
Catch you then, everyone.